All right, good morning, traders, and welcome to the All Markets webinar. This is Bruce at Bookmap, and we'll take a look at the live order flow using Bookmap to understand the market participants in the auction process. To understand the this is what order flow can do for you, is to be able to understand how traders are reacting and acting within the market, because the only way that they can is via their orders. So it's not open outcry in the pits. It's not behind closed doors. It's all in the order book in electronic markets. Okay, now if you're trading stocks, it's going to be a little bit different. There'll be over-the-counter exchanges, etc. But with the futures, it's not. It's about as centralized as it can be, which is great. That's a lot more transparency for us compared to other markets around the globe. So it's really great. That kind of transparency is what we want, and it levels a playing field for us. And then understanding the order flow in this market environment is essential. It's an edge, and that's what we're here for. All right, so the Bookmap Academy, our journaling process in here and building out a playbook. I just have this list in here I go over every webinar. I'll update this to make it a little bit clearer for you guys, but the impetus here, this is the first thing we want to understand, and it is critical. Right? It's a top-down approach here. What's moving the markets? What's the market reacting to? What's the bigger picture? And we want to answer that question. If you don't know what's moving the markets, then you probably shouldn't be trading, and you've lost your edge right there. Okay, now it could be, it doesn't have to be news, it doesn't have to be geopolitical, it could be technical. There could be technical levels that traders are going to react to. Like last Friday, we were looking for squeezes to the upside, and we saw some nice ones. All right, so especially in gold was a real nice one, and that's technical. Is traders who got it wrong, and we're looking for that in the order flow, and that's the edge. All right, so the key levels as well. These kinds of bigger moves are going to happen around the key levels. We'll go a top-down approach with that. Start with basically monthly, weekly, daily, yesterday's or not yesterday's, Fridays, open, high, low, and close, and basically the swings. We want to understand what's going on at those levels, and then we'll get into the overnight and then intraday levels as well. We want to look at levels where traders are reacting. This number 1 and number 2 here will filter out a lot, and it will make you focus on what's important. Now we'll get into scenarios and strategies and then our setup. Okay, we want to filter out this number 1 and 2 here and filter out a lot of the noise by understanding what's moving the market and the key levels. All right, now the scenarios and strategies. At those key levels, how do we want to react? What are we looking for? Our scenario or our strategy might be, well, if there's, we're waiting for FOMC on Wednesday, well, I think I might short some of the tests in the upper levels, important levels, and look for more kind of mean reversion type of setups. Okay, that could be one way to look at it. Or maybe you think that there's going to be an interest rate drop, and when you see breakouts, you want to buy them and you want to hold them and look for the move beforehand. So we don't know the data in the scenarios and strategies. Like for FOMC, you're speculating on that, and that's okay. It's market sentiment is such a huge driver, and that could be the impetus up here. All right, so it's the market sentiment for the fundamental event that's coming up, the data event or the FOMC. Okay, this happens all the time. So you always hear buy the rumor, sell the news. This is what we're talking about in here in developing strategies and scenarios. And then finally, we get down to our setup. This is mechanical. We should know it. You know that you have an edge. You build out your checklist. You grade it. You determine your risk. And you wait for your order flow events to manage your trade. And that's it. All right, so now getting down into this part here about your setup and understanding if you have that edge. This is really critical. Okay, so these 4 elements in here will set you up on the right path to a higher probable outcome. All right, and having that edge is the biggest difference in your setup that I see between traders. That instead they'll just learn to set up and avoid 1, 2, and 3 here. Even number 4, they don't even know they have an edge. They just know a setup, right? And then so this pilot program is something that we came up with that will help you build out your trading edge. Okay, this is the biggest issue I've seen between traders is not knowing if they have an edge. We developed this program in here so that you will go through a process to build out that edge, which a lot of traders, they don't even know how to build it out. And it's understandable. No one really covers this. So we've got a whole process here designed to change that. It's a structured process and will take you from 0 to a measurable, testable edge that you will develop. And this is the fastest method that I've seen from doing many of these in the past and tediously looking at data. Instead, we've got a really kind of nice interactive method here that will help you build your edge in a gamified environment, basically. So anyway, if you're interested in that, I'll show you where you can find out more. Just go to bookmap.com, click on the More button up here, and then under Community, you'll see our Bookmap Academy here, and you'll see Bruce's pilot program down here. Just click on that, and that'll take you to it here. Okay, you can sign up in here, and then you join it in our Discord channel. All right, let's go through some disclosures, and then we'll jump in. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so I had one more thing here to go through, and that was here. The recording for this webinar we had last Wednesday. Okay, the event's over, but I have the recording for you if you guys are interested, and I'll put this into the chat here. All right. Okay. All right, there you go, in YouTube and also over here in Discord. All right, let's take a look here, and we're going to go through this process again in our bigger picture. Just what we were going through earlier in the image with the text there. All right, let's see here. I got a bunch of questions in here. No, okay. Good morning, Alois. Good morning, Stephen, and Dan. Shark, good morning. All right, I'm all caught up over there. We're caught up here in YouTube. Okay. All right. Okay, so let's go through our process, and we'll start with this bigger picture in here. Good morning, Sakin, and Laura. All right. So I'm going to look at. I'm going to show you how to look at it in Bookmap, but we're going to go through some candlestick charts in here, and then we'll relay this over to the Bookmap view as well on the daily here. Okay, so this is pretty bullish. You know, we're seeing a pretty big candle here, and after this kind of sell-off, the tariffs, all this kind of stuff, we know one thing for sure. Is the market doesn't like this bad news about tariffs. And that's really the only thing that we've seen the markets react to pretty severely, time and again. All right, so what's going on in here? Well, we're starting to see like I don't know if it's the taco trade. Trump always chickens out, but maybe it was just a lot of drum beating, and we don't really see too much about the tariffs anymore. So people are buying the market. Money's coming back in, and we can see it here in the candles. Okay, so we're going to look at the order flow and really see it. We just filled the gap here on the hourly, as you guys can see, and we can look at some structure in here. I want to talk about market structure today and the importance of it. I want to focus on that. And then the order flow is within the structure. Okay, so we can see that there's structure being broken in here, right here, horizontally. Okay, around this 69, 67, and then we're also going to be able to look at it here. Hold on. Diagonally here, right, on the daily. Well, down here, but if we draw it to these areas here on the hourly, then we can see the breakout. Okay, so where do we think price is going to go? Well, the first stop would be this gap fill right here, and we're already there. The next one is going to be up here, where we see some swings and some selling coming in here. Okay, and that coincides pretty nicely with the 7,000 century figure up here. Okay, or millennial figure up here. Yeah, there we go. That's kind of a bigger overview already. On the downside, if we come back in, look again at some of the swings in here. We can look at this maybe on the downside. Actually, yeah, let me clear this. And we'll start again. And we'll start with selling. Someplace, up in this zone up in here. We'll look for it though. Again, these are just zones on the bigger picture. Okay? And we have some structural elements in here that we're looking for. Okay, some of the swings we just talked about earlier. So this is kind of setting the roadmap for the day. Now, where do we want to be buyers, or where do we want to look for order flow to be buyers? We're not sellers up here until we see something in the order flow that gives us the edge that we're looking to sell. All right, big distinction, really big distinction. So we don't get run over here. We have order flow confirm it for us. All right, and then what about on the buy side? Well, we'd be looking for areas down in here, maybe a small area kind of in here, also where we kind of opened up in the cash open here. So we have the 69.50 is kind of that area, and then looking for maybe pullbacks into these areas in here if the order flow gives us that that insight. All right, so these are some of the levels I have on the hourly. On the daily, how does it work? Well, you can kind of see them in here. Let's go to yellow here. Okay, so actually, yeah, 7,000 still looks pretty good. And then also this kind of area here, which I think is around the 69.70-ish. Yeah, 70 is what it looks like. All right, so that's that. Now, I also want to go over with the bigger picture in here, certain things. Okay, so what do we see in here that this looks like structurally for you guys? And this is important. Good morning, Nadia. All right, well, we start to see a continuation pattern, right? And we're getting follow through right now. We can even look at a measured move in here and start to think how much more juice does this have, right? You'd be looking at something like this, and so you could look for maybe a swing up into this area in here on the higher time frame. Okay, now I'm just outlining what this might look like. We don't know, but we're going to look for order flow to give us the clue that we're going to be coming up into these areas up in here. All right, and so far so good. I mean, this is a powerful move we see here on the buy side. Now, this helps us immediately we're just talking about technical levels in the structure, but it helps map out our day and give us kind of more realistic understanding of where we might go and why. Okay, we also have lots of data coming out, and you know, the month will end here. Actually, it's interesting to see, like, some of the data. FOMC is on the 28th. Okay, and then on the 30th we have PPI coming out. Okay, I mean, it's usually the first month of the the first 2 weeks of the year, especially the first week, we see all this kind of data coming out, and we have tons of data coming out next week, right? And that'll be in early February. But we do have some big events here this week, and we have all sorts of geopolitical stuff going on as well. As you guys know, the biggest move here is happening with the tariffs, right? So anyway, guys, the momentum move continues here, as you can see, and now let's jump into the order flow and take a look here. And I wanted to show you guys this here and relate this to the bigger, higher time frame here in Bookmap. Okay, so anyway, what we just looked at, and then we zoom out here. Now, I showed this on Friday and maybe on Tuesday. I'm using Bookmap 7.7, and I also have under settings here, I have this box checked, experimental dynamic history. All right, so this is a new feature, and you can see here next to my ESH6 here, there's a little button here, or icon here, and it says this is a generic instrument that represents the current active contract. So what this means is this is the continuous contract here, the ES. All right, so you can see here, well, we can put in another contract in here for the Russell, for example, and I'll just show you that. Okay, so let's put in the Russell, and we'll go with the continuous. Well, let's not go with the continuous contract. We'll go with the H6 contract here. Okay, so this is the Russell for the expiry of March 6th, and we'll click on that, and then we'll click subscribe, and note that it doesn't have that little continuous contract icon there. Okay, so we're not going to be able to zoom all the way out on this. We won't be able to zoom out for a couple of years or so. Actually, it lets us zoom out quite a bit, but you can see, look at the big spreads in here. Okay, that's because it's not the continuous contract. This is the H contract, the March 2026 contract. All right, but this is as far as I can go, and it's pretty far, actually, August 14th to 2025. But let's close that, and then we're going to resubscribe, and then I'm going to show you the continuous contract. Okay, and all it is RTY, okay, for the Russell. And it will go to the current expiration month. All right, and then you can see the little icon in here, this kind of arrow followed by another, chasing another arrow in here. Okay. All right, so actually it goes back to just about the same distance actually for the Russell. So we don't have actually a two years or 3 years for the Russell, but it goes back the same same distance here as the H contract, but we have much more active or updated order flow in here, whereas the other one, you saw those big spreads in here. Okay, you don't see that here because this is the continuous contract. All right, so anyway, if you guys are interested in accessing that, you'll need 3 things. Number 1 is check this box here in Bookmap 7.7. Number 2, it has to be with Bookmap Data. All right, that's critical. It does not work with Rhythmic. And then number 3, you need to put in the continuous contract of ES and then get that little icon in here. All right, and those 3 things, you guys should have access to it. Let me know if you don't. You know, I'm going to tell you to reach out to support if you don't. They're the ones who can flip the switch if there's any kind of issues with it. All right. Anyway, all right. Let's move forward and take a look and see what's going on in here. Steven, you say I see liquidity on the bid. Wonder what will happen. Okay, yeah, well, let's jump over. Well, Steven, there's understanding market structure and high liquidity in the bigger picture here. Okay, some simple takeaways in this. Okay, we want to understand where the high liquidity came in, how long it's been in here, how high is it, and this is, again, we're talking about context in here. Okay, so look where it is down here. We see it at 6,900 and then down here at 6,880. Okay, look at some of the swings in here as well. Back on the 19th is what I'm showing here. So like or end of the last week, we see the move down into this area here. Okay, so now the question is, and the thing we want to understand is, okay, it's great to understand the high liquidity, no doubt about it, right? We want to understand that. Okay, we want to understand where that high liquidity is on the bid or on the offer. Okay, but it's critical to understand if the aggressors go for it. Okay, is it a target? If they are not going for it, as you can see right now, they are not. Okay, so they're going for high liquidity up here on the offer, and there's more up here at 69.90. Okay, now I think maybe it's you're looking at, let me take a look at your, oh, you're looking at the 6E. Okay, I do not know then, but same idea here. Okay, there's high liquidity down here at 80, 78, 77, or yeah, 79 and 78. Now the question is, you know, do the sellers want it? So let's bring up the volume dots. And this is what we're talking about in terms of context. This is critical for everything in the order flow. And it's critical to understand this within your setups. All right, so what do I mean? Well, we first start off with market structure, okay? We'll start to draw up some market structure. Okay, so let me just take these things off the chart to begin with. Okay, I'll come up here, I'll turn the heat map off, and I'll turn off the volume dots. Okay, this is the back and forth in here of the best bid and offer. Okay, there's really no time frame in here. You can see the divisions here vertically. In this case, it's only 5 minutes, but I zoom out, it'll change to like 15 or 30 or an hour, etc. All right, so what do I mean by market structure? We can draw it up. I'm going to use the new channel tool in here, and we'll be able to draw it up pretty easy. Okay, there we go. And then I'm going to edit it, and then I'm going to just bring this up. Okay, so there's this here, right? Or, you know, we may even say it's this here, between the high here, 69.80, down to like, I don't know, 74 or so, maybe 71. But most of the activity was within this structure here. Okay, this failed, this breakdown failed, and we see the buyers come right back in. All right, so now what we want to understand within that structure is the order flow, and we want to understand the transactions. All right, so let's take a look first at the transactions, the volume dots. And we're going to zoom in here, and I'm going to use this tool here to zoom in. Right, so we'll go from there to there using the dynamic zoom tool, and then take a look. All right, so now let's take a look at the we have the structure, and what's the volume within that structure. Now, I know for a lot of you guys, this is all that attend this webinar, you know this very, very well. For those that are new, this is kind of a first step, but it's also good for review. And understand these three elements are critical in showing this in Bookmap. It sets up everything. Okay, and I don't care if you're looking at like a candlestick chart on the monthly or the weekly, whatever it might be. It is the same stuff. It is the same elements, and it's just on a higher time frame with more liquidity and more transactions, and maybe a bigger structure. All right, but it is all fractal. You'll see it time and again on all time frames. Okay, so this is a false breakdown. Actually, this is one of the setups in I'll show you here in the Learning Center. Okay, so if we go to education, and we go, it's actually on the sell side here. We'll scroll down here to supply and demand setups, and then it is the flag pattern with a failed breakout. Okay, this is a very, very powerful pattern here.
Bounces and catches.
Because what we're looking at is a structure, and then you see a break above that structure. In this case, it's to the downside, and it fails. This breakout fails. And these buyers up in here are going to be trapped. They're going to help fuel the move to the downside. And then we start to look for the order flow to support this move to the downside to trade into the bottom of the range and then continuation. Now, the important part about this setup in here is you're going with the bigger trend, the higher time frame move. Okay, so here's the move to the downside. Here's our sideways structure. Here's the false breakout, and then here's the continuation move to the downside. All right, so it's really important to understand that because we want to go with the bigger picture move. Okay, now if this is going to be reversal, we look for something else. Okay, we look for similar things. We're just looking for a transition though from this sell side to buy side in these areas, in this area right in here in the structure. Okay, and we don't really see it in here. There's a little bit of buying. We look at the bars and the dots and the size and compare them to the selling. All right, so this is more of the trend line break accumulation, but this is a continuation pattern basically. All right, failed breakout. All right, this is similar here. It's not really a flag pattern in here, but we can see that it broke down, came back up, and then look at the nice buying starting to come right back in here. Okay, so we're seeing the continuation move, right? Buyers, back and forth, sellers, buyers, buyers. Okay, and that's where we start to target high liquidity on the offer. All right, so then let's come in and add the heat map in here. Okay, so the heat map, the target would be top of the range, and then high liquidity up in here and high liquidity up here. Okay, and you can see what's happened so far. All right, we traded to the high liquidity up here. We did not make it up into this 90 level, and we can zoom in here and get more insight to all of that. We see some high liquidity starting to come in here before it, and we see a lot of absorption and a lot of passive accumulation in here and also at the top of that range. Okay, so after that area in here, let's start to look at some context. So we trade up into these areas up in here, and we see buyers, aggressive buyers, meeting the passive sellers. Okay, now we get back up again, and do we see the same type of like vigorous buying up in here? No. Okay, we see some here. We see some a little bit in here, but it trades right into high liquidity again, and it doesn't go above it. Okay, here's the retest, and note that we see some selling in here. Now, for the reversal to take place in here, there's a few things we want to look for. Okay, we want to see some selling already come in here. Okay, so there's a little bit of back and forth in here. And then we want to see less buying at the top here. We want to see it basically exhaust out, and it does right here. Fails to make a higher high, and we see sellers in here. Once we start to see that selling that already built in here, and you see it again down here, and that's when we're looking for it to break and follow through to market structural areas again. I would look for a structure here. Match it up with high liquidity. And now it just blew right through that level, and it came back down to the swing down here, and the high liquidity it was attracted to down here. It didn't trade it. Okay, we see that maybe some profit taking, or I don't know, some buyers start to come in, or less sellers. Sellers not willing to sell it down here, so we get a kind of a pullback, and then we get follow through. Okay, this is a low volume pullback in here. Okay, I know you guys are interested in that. I don't really, I mean, yeah, you can zoom in here and you can see low volume pullbacks in these little micro areas all the way through, but this is the bigger one in here. Okay, so we do see some volume here. It's not much in the bigger picture, right? So I would look for sellers to come in again and then trade it back down to some of this high liquidity, right? So I will be putting together some files for you guys, some replay files in the pilot program on that low volume pullback. All right, so there we go. Our move back and forth. We trade deck down into this area here, and our structural area. Okay, note some things in here. Again, this is context, and we're talking about market structure. Note how we trade back down here and we get a bounce. Okay, our structure is here. In fact, I'm going to edit this and I can extend this to the right here. Save and close. All right, so it dipped a little lower, kind of dipped into this structural area here. So in fact, let's just kind of move it around just a little bit here. Okay, and why? Okay, because there's some structure here in this where the buyers came back in. That's where it retested, and that's where it bounced. Okay, so you know, in hindsight, that's easy. I would be looking at the swing on the way down and just traded a bit through it, traded into the high liquidity down here, and then we see the buyers come back in. Okay, so that's what we see. And now down in here, do we still see aggressive buyers? Yes. Okay, so let's see if these buyers now can come back up into this swing and break it and come back up into trade to this 69.90. All right, let's take a look at the context in here. Okay, so we have a new structural area. Yeah, I would say, like right here, I see liquidity coming in at 86, and this is where it dropped from. That would be my first target. Again, now these are not setups. Okay, this is just putting together some pieces in the order flow. Okay, the setup would be something for me. I don't think I put a setup for this breakout trade, but I would look for the bid to show interest here, and I would look for buyers up here. Okay, it's basically a weak top, and I don't really see, you know, I want to see kind of more buying up in this area up in here. Then I would look at for it to break. That's the weak part. It will break the top because there's more buying up in here, and I would target 86, 88, and 90. Okay. Right now, this again, that's not a setup, but this is something to we could work into a setup very easily. All right, so here they come. All right, now what's the bid look like? You know, they're bidding up a little bit here at 80. I don't see a whole lot, so I really want to see the bid come in here and kind of push this. The reaction to this strong bid in here would be aggressive buyers. That's what I'm looking for. Okay, if I don't see that, we have the possibility for going back and forth, and another rotation lower is higher. Okay. All right, so if you don't see it, or if this is something part of your setup that you're building out, then you know, don't take it. Right, there's a higher probability that this is going to rotate again, and that's just, you know, order flow. All right, Any questions on that? Let's see how we're doing here in YouTube. Okay, Malek, the history data does not show up in settings. Is it you're using 7.6? I know. I believe the setting is in here for 7.6 experimental dynamic history. But number one, are you using Bookmap Data? Okay, and what instrument are you accessing? I believe it's only for the ES, NQ, and Russell. And you can see for the Russell, it doesn't go back years. Okay, I think MNQ as well, and MES as well. Okay, but let me double check that here. Yeah, I'm only going back to like March in 2024, so almost a year here, basically, for the MNQ. Okay, now for the ES, let's see how far we'll go back here. Yeah, see I can go back to March 20, or even further than that, November of 2021. So try that, Malek. Hope that helps. All right, so yeah, we see how we're getting another rotation in here. Now look at the offer here, and then see the reaction. Found sellers. There was more here on the offer, and we didn't find buyers interested in it. So now we're kind of looking for sellers to trade it below this intraday swing here, down to another intraday swing here at 78. Okay, there's more selling coming in, so I would look for these sellers to hit this 78 level here, and then we'll see. Okay, so take some risk off, or maybe in a choppy environment like we covered last week, we're looking for taking our profit, okay, in a choppy environment. And we never know, right? But this is why you use that top-down approach of like what is the scenario you're looking for. Okay, just about there, but I really want to see it trade into this liquidity here. 173 contracts there. All right, so now guys, like, going back into some of these intraday swings in here, this is really, I find it very important to understand this, is kind of zoom out. Look at your bigger picture here about some of these swings. Like if you're going to really be zoomed in, are you really looking for a reaction at this swing? Okay. Now you might, but in this environment in here, I'm not. Okay, there might be a little back and forth. I don't know, but I see more selling in here. So I'm looking for them to trade to a bigger intraday swing down here. Okay, does this make sense? Okay, see now we traded into that liquidity and we're seeing a reaction here. We're finding a few buyers now. Okay, this is exactly illustrates the point very nicely. Okay, and that's why we start with the bigger swings. Okay, intraday swings, like this one's going to be really important down here. Else what happens is we blow through these kinds of smaller swings in here pretty easily. All right, now let's see if we can get buyers. Now we can look for this setup to trade up into 82 liquidity. Okay, so we're looking at back and forth in here, and let's see if we need to see more buyers come in though, right? Right now, let's just look at the buyers and sellers in here. Okay, I'm seeing some clusters of buying. I'm not seeing the buyers though that we're really looking for, so they trade back up to 82 here. Okay, so now you can see we rotate back down, we made another low. Okay, a lower low. All right, so then I would look for our levels down here, 73, 75, and also down here, which we didn't draw up, but this kind of 71 level down here, which we'll draw up. Okay, and then we're going to look for order flow around that area. Okay, now again, these are just levels. Okay, and we're not just blindly buying and selling at levels. Okay, we're using Bookmap to give us insight of what's happening at those levels. How are traders reacting? A few questions here. Malek, well, first off, Malek, it sounds, if it's Bookmap, it has to be Bookmap Data and it has to be ES. Try ES first, and then and put in the continuous contract ES only. Okay, and then make sure you check that box, and then try zooming out. Okay, if it doesn't work, I mean, you got to try it with 7.7. Okay, first off. Okay, so now maybe this is that false breakdown and a trap for sellers, and we find some buyers now. Let's take a look. So I'm looking up here. I'm looking at 79.80, somewhere up in here. I want to find buyers. Okay, see we're looking at the bars, delta, the volume bars, and the delta dots in here. Okay, we want to see more buyers, and then we're going to look for, let's look for a bid underneath. See the bid underneath here at 77.5 right there. See how they bid up, and here's our reaction. And this is what we were looking for over here, but now we're getting it. Okay, we had to do one more rotation back down, and then we're back up. Okay, so this is another false breakdown in the direction of the bigger trend. Okay, now I would look for actually, yeah, my first target would be 82 here. But since this is the bigger trend, I would look for a higher level, maybe 84 or maybe 88 or 90. Okay, so that's what I'm looking for in here. Now, for those of you new in the program in here, you know, just hit a single, take some risk off or take all of it off here at 82. Okay, make some money, be consistent. And then do it again. And then as you become better and you start to understand more that, well, you know, I'm looking for actually higher, this level at 84, 88, 90 in the move of the bigger trend, that's great. You'll understand how to make a little bit of money, and now you're looking for a better setup to make more money out of it, and you start trailing your stop and moving your target up into these areas. Okay? And you understand that you're going to get stopped out more often, and that's fine because you know that you can make a little bit of money. You've already built that confidence by hitting a single, okay, up into 82 here. Right, so we're still looking for a bigger move. Now the bigger move for me would be right now just to the swing up here at 84. Okay, 84, 84 and a half, wherever the liquidity is within the swing. Okay, because we know that what are we looking for? We know that there's going to be sellers up here, right? We're looking for a reaction in these levels here. Now, if there's more buyers than sellers, well, they're going to go up to a more important swing. They're going to blow through that one here at 84. Okay, so how does it look now? Well, if we zoom out a little bit, it looks pretty good, right? Look at that cluster of buying. Look what it turned into. Like we saw a little bit of buying in here, and we go, it's not really enough. You know, don't really like it. Didn't have much on the bid, not much of a reaction, but now it looks pretty good, right? So here we are up at 84 already. but this buying looks pretty good. So I would look for higher. I would be moving my stop up. All right. I would look, there's probably going to be a pullback here up at this 84 and a half. Okay, so you have to anticipate that. Where might it go? Okay, well, maybe down to these minor, very minor swings here. Okay, low time frame swings. Okay, so maybe here at 82, which lines up with some of that previous liquidity that filled. Okay, maybe all the way back down to 80 here. Okay, where it broke out from. All right, so again, what we're putting into the context here is some of the swings and then the order flow. Okay, so here's our pullback, 82. Okay, let's see, do we get more buyers here? Not yet. Okay, we might have to come down lower to find buyers. Okay, we might, come all the way back down to 76. We don't know. Okay, but what we do see in the order flow in here is this back and forth, and we see a lot of buyers in this area in here, and that's good for the continuation move to the upside. All right, I hope this makes I hope this makes really clear sense to you guys. It's pretty simple stuff. Take all of this kind of candlestick and divergence and all these other things and put it aside, give it a rest, and think about these three things in the order flow and this context that we're putting together. All right, I think it'll help your trading a lot. So let me know if you have any questions here. Is this too much for you guys? Too little? I know that Laura is going to say something like, "Oh, it's perfectly clear." But Laura, you're more advanced user in here. So for those of you who are new, is this clear? All right, let me see on YouTube here. Is there a way to see delta dots, traded contracts out footprint? Yeah. I mean, it basically, it's graphical in here, the delta dots. Okay? And you can use this tool here and hover over it. Hovering over with or without this tool, it'll still be down in the lower left-hand corner here. And you can see the volume. Okay, so this represents a cluster here. This graphic here and the size of this represents 234. So this one's going to be bigger, right? This one's 605. So this is how you can kind of start to put it together. I like it a lot because if you want footprint, you can put the footprint chart on here, and only time based though. Well, you can put in others. It's just time based is going to look cleaner, and then you can look for exactly the numbers in here. Okay, but otherwise, graphically, this is what I'm looking for, and I understand what this is going to look like in a footprint chart. Okay, Vinfra, more or less clear. Okay, so look at this structure here. Okay, looks pretty bullish to me. Okay, I would look for it to break out. Okay, and it's just breaking out as we're talking. All right, and how did I know that? Same process we just went through. Okay, do I see a lot of selling in here? Nope. Right? Do I see a lot of buying? Yes. Do I see buying coming up into these areas? Yes. Okay, then where's my target? Well, a few different ways to look at that, but the high liquidity up here at 87 and 88, and then we said 90 as well, right? Now, another thing I personally like is measured moves. Okay, there's reasons for measured moves. So we can look at this move from like 85 to 82, let's call it. So that's only 3 points. This is going to be 83 to 85, so that's only 2 points, right? But we can start to look for the breakout here. 85 to 88 looks pretty good as a measured move before it maybe peters out, right? Nothing against you, repeat. Just we're looking for it to kind of run out of gas. And there's liquidity there too. So if they trade up into this area and we don't find a lot of buyers, likely it'll come back. Okay? Again, that's the context we're talking about. Now, we don't know. All of a sudden, we might find on a higher time frame, okay, up here, it's like buyers come in hand over fist. They go, wow, it's breaking the highs of the day here. At this level, I'm a buyer up here. And we start to see that. Maybe it really picks up. Okay, but what we're looking for right now is a move up into here, and it kind of completes the measured move, and then take your profit, okay, to hit that single. When will I think about trendline break and a reversal? Nadia, when we start to see that unfold. Okay, I mean down here, it's more on a micro level. You can see it down here. Okay, or in here. On a more micro level, it fits the conditions though, right? Now I know I have not covered that. I cover it really only in these webinars, not to confuse you guys, but just to show that it's fractal, okay? Because here's our break and of the diagonal structure, but also the horizontal structure here, right? Here's our break. Look how we retest back to the top of this little breakout of this swing here, and then we get more buyers. And not much selling and then more buying in here. All right, so it did it here. Nadia, go back and look at these areas in here and really look at some of the details in here. Okay, let me guide you through. This is what I mean. All right, so we have the move lower. Do we have here? Let's bring up our checklist. Okay, always on top. Here's our checklist, right? Passive accumulation on 3+ levels, 1, 2, 3. All right, at a key level. This is on a higher time frame. No, we don't have it. All right, we have it though on a lower time frame. Okay, now I don't want to confuse you on this, but the is still the same things. It's just on a lower time frame. Okay, and our expectations due to the lower time frame are muted. We're not looking for a bigger reversal move out of this. Right, so you have to mute your expectations because of the time frame. The break of the structure. Okay, we had structure break on both diagonal and horizontal. And then do we have the aggressive accumulation? We have a nice pocket in here, and look for this beforehand, right here. And it starts to pick up again in here. Looks pretty good. And then we have a nice one here, starting to pick up again. And then here's the move. Okay. Now, where are we looking for this to go? Well, up to the swing here, right, on this kind of intraday time frame. Okay, is it an important swing? No. For this time frame, though, that's what we'd be looking for, is just the move up to here. Okay. Take some off. Maybe it really picks up and comes up into our 90 level at that point. It did not. It rotated around more. Okay, but you can look at these areas and learn a lot, Nadia. For anyone in the pilot program, and you can learn a lot in the current market. Okay, make sure, Nadia, that you first start with that bigger, higher time frame outlook that we covered earlier today. Right, that will set you up, and then you'll be able to understand order flow and put these pieces together on a much at a much higher level, a much improved level, I should say. Okay, and you can see this did a nice little measured move from 77.5 to, like, let's say 80.5. So that's 3 points, and then from here, let's say 81 on up to 84. Okay, 3 points. Beautiful, right? There's a swing, there's high liquidity. This liquidity is pulled, but it still traded up into it here at 84.5, and that's when we get the back and forth. Right now, again, I don't want to explain every little thing in here. I mean, in hindsight, it's all explainable, etc. It's easy, but come on, we see this all the time. Now, the beauty in the pilot program in building out your edge is you're going to be able to do this in replay mode. So it's kind of you're not doing it in hindsight. You're doing it in real time. It's just not, it's just recorded though. Okay, so this is a practiced setup that you're going to go over again and again and again. And then when you start to see these elements in real time, Nadia, that's when you can act. Okay, now I'm not advocating on this very small time frame in here to do that. Wait for the bigger picture. But anyway, you get the idea. Okay, now what happened up in here? We're looking for this to break out, right? And it did up into only up to here. Well, the swing is up here. This is where the sellers came in. Okay, I was looking for it to come up into 88. It didn't do it. Okay, now look at the selling coming in now. Okay, so again, like, look pretty good for me, and it didn't work out. Okay, how do you manage it? You're moving your stop up. You're taking partial profits. Maybe you're just hitting singles, and you're getting out. Okay, if you're moving your stop up, you would have been stopped out. Okay, you would have had maybe a small loss, either a break even or a small winner. And then you look for the next one. And this is why I advocate hitting singles to begin with. Make a little money and get good at it. And heck, you could make a career out of just doing that. But if you want to get a little bit more out of it, you're going to have a lot more stop outs, a lot more break evens or small losses. Okay? And that's fine. That's fine. Okay? In fact, if we go back and we look at your again, this is a really important part, Nadia, is to then look at your data in here, and that you capture in your trading journal. So first you're going to be using your setups checklist here and grading it, and then secondly you're going to be capturing that in your journal, and then you're going to start to build out your notes column in here. And here, let me show you mine for a test in here, because this is PMAG's in replay. And PMAG, I know you, if you're in here, I know that you had requested some feedback on this, and I'm just getting to it now. Anyway, let's see, where's my test here? There it is. Okay. Actually, it's not a really good example to show. I probably shouldn't show it. But this is what's going to probably happen, and I hope it happens for a lot of you, is when you first start off, not just in replay, but when you get into forward testing and then also live trading, I hope that I see you guys taking these small wins and seeing kind of like a curve, kind of like this in here. And then as you get better and better, what is likely going to happen is, see this 71% here of profit ratio? Well, that's going to drop as you get better. Sounds funny, right? Well, this is the way I imagine it will go, is that this will drop down to probably 50% or 60, or maybe below, maybe 40%. You know, you're only right 40% of the time, and you'll see all sorts of small losses. And instead of the equity curve growing like this, you're going to see like a big move. Let me draw it, it'd be easier. Instead, you're going to see something like this. It'll be like you know, maybe a move up, and then it's going to go like this, and then you're going to get a big move up, and then it's going to go like this, and then a move up, and then it's going to go like this. So these are all going to be losses, okay? And there's going to be a lot of them, right? And then when you do get it, though, you're going to knock it out of the park, okay? This is very typical for more advanced traders. Okay, they take the losses. They know how to take the losses. Okay, but what I'm advocating to begin with, though, is that just hit the single and, you know, build some confidence. You know, take a small win, get out. Take a small win, get out, etc. Repeat that, and then start to move your stop, because you know that you can get a small win, but you don't want a small win now. You want a bigger win. Okay, you want a small loss. Okay, and you know that when you start hitting a few of the bigger wins, you'll start to understand the risk dynamics much better. All right, let me see if there's any other questions here. I mean, let's see, Laura. Oh, there's a lot of questions or some activity here in YouTube. What are the 3 volume profiles over here? Okay, actually, you know, I'm kind of looking at some options levels in here on my own, that's something else. I'm getting it from the CME website, so that's what that is. But here, this is the COB column, which means current order book. Okay, this is our order book. These are limit sell orders on the offer up in these levels, and these are limit buys down here. Okay, so at 80, we see 125 contracts, the most in this view right now. So let's see, sellers, are you interested? Are you interested in breaking this minor swing to trade down into this liquidity here? Okay. Are they interested in trading back down to some of these swings in this liquidity down here? Okay, 106 down here at 77.5, down here at 75. Okay, so guys, one of the key takeaways in this webinar is about the market structure and these kind of lower time frame or minor swings. Okay, like you can look at them and look at the order flow around them. You know, if you're trending up, for example, in a pretty big trend, then these levels can be more important for sure, right? Because there's a big trend to the upside. But in a choppy market, some of these levels in here, you got to be very careful. They'll blow right through them. They're minor. They're kind of, traders don't care. Larger players or larger time frame participants don't care about those levels. All right, so you know, they'll just blow right through. See here. Yeah, the volume Royce is or delta, buy minus sell. You can right click on them or come up into here, studies configuration, volume dots, and this is by default the volume delta here, buy minus sell, but you can look at total volume if you want. It shows the delta in here as well, but just in a pie display. Okay, so there you can see in here is relatively equal, a bit more selling than buying in this area right here. See the pie? There's more buyers than there is sellers. Okay, here it's equal. Right, so that's why like we put in the delta. This will disappear here now, this dot, when we go into the delta, and it will turn into something else. Okay, because they're equal, so its volume is traded volume, right? But it's since it's kind of equal, it's going to be a very small dot, right? And there you go, right? You can see it disappeared. Now the delta on the buy side is pretty good. Okay, so there's more buyers than sellers in here. All right, so let's see the buyers trade up to the swings. Okay, let's see them trade up to 84. And then maybe they can come in. Maybe we're at a lower level now, and we're going to find more buyers, and they're going to trade to 84.5 here. Maybe there's enough to trade to 88 now. Or I'm sorry, 80, yeah, 88 and 90. Okay, Rumor, you're in the in Nasdaq, and you were long. Why were you long? We'll take a look here. What are the Ahmed, what do the stops and icebergs give you? This is a lot more detailed, and it is very objective data that it's giving you, but it's within the order flow. It's the order types that are actually transacting within the order flow. Okay, and this is great. Okay, so for example, let's take a look here. So the red line down here is stops, and the blue line are icebergs. Okay, so you know what an iceberg is, right? It's a hidden order from the order book. It's not in the order book here, or the majority of it is not in the order book. Only the tip of the iceberg. So let's suppose like this. Let's just take a random level here. Let's go with this 69.80. We see 132 contracts there. There might be an iceberg there. Okay, we don't know. We don't know where they are until they start transacting. Right. In fact, there might be one there right now. Let's turn on the on chart. So you get both of these indicators here, on chart and sub chart. And I'm going to show all of them here for stops and icebergs. Yep. And yep, same. Okay. Okay, so yeah, here's a sell iceberg, and it totally transacted here. Okay, for 110 right there. Okay, and it ends this blue line. So we know if that iceberg when it starts to transact, this blue line is actually showing us that you can see they moved it down here. So it was only 12 that transacted here, only 12. But we know that, and we know that it's an iceberg order. We don't know how much is behind it. Okay, we just know that 12 transacted. Okay, here we found out, and we zoomed in, we really found out it was 112. Okay. So there's a larger player up here. He's using an iceberg order. He's hiding it from the order book, but we can really start to pinpoint exactly where these larger players are that are using higher order amounts. Okay, and we can look at this in the subchart or on chart in here and start to look for how these larger players are behaving. Now stops is the opposite. Okay, we don't know where the stops are, but when they start to transact, we know. Okay, so we can see this move to the upside here. These are buy stop orders. It's a stop run. Okay, 163 here. Okay, so 76, 171 down here. Okay, so a lot of stops being triggered on this move to the upside. Okay, when we zoom out, it aggregates into a bigger number. to try to make it easier for you to understand. Okay, so again, these are the order types within the order flow. Okay, so now we're back up here again, and we do have a cluster of buyers here. Okay, so now let's see, do we get more buyers here? We're starting to. Okay, so now we know in the structure in here, this is what we've got. Okay, and we're going to look at the structure. And for the break of the structure, what do we need? What are we looking for? And we're starting to look for more buyers than sellers. And we see it's kind of back and forth. But buyers may, if they start to pick up here, and if we see these guys down here at 80, well, what if they move it to up here? Right, and what the reaction to that move of high liquidity from here to up here is more buyers here, big green dot. I would look for the break up into 84 or maybe higher. Okay, that's putting these three things together here in this scenario. Okay, structure, the order book or order flow. Okay, and then the transactions. Okay, note how they are bidding up in here. All right, but what's the reaction though? We got to see buyers off of that. And now here they're starting to come. Okay, looking better now. Okay, sellers actually started to come down, so they're interested in this liquidity in here. Right, and then there they are. They are interested in it. Okay, so we found some sellers. Transaction took place in this 81 liquidity here. Let's see, is there more? Okay, then this is a very, very minor swing. Okay, it's not micro level, but it's, I want to be really precise with definitions. It's just a small, very small time frame level, low time frame level. But micro is sub-second. Okay, and microstructure is sub-second. Okay, so we're not getting much feedback here at all. More liquidity came in there at 83, and we didn't find buyers. We didn't really find many sellers either. So it's just back and forth. Okay, we're stuck in a range. All right, let me see if there's any more questions in here. Nope. Okay, so now we traded down into this. It's a little bit higher time frame level here. Okay, so Nadia, let's go through the process in here. Okay, on a on a much smaller time frame. Let's look at it here. Okay, what's happening? Okay, well, I'm seeing quite a bit of sellers down here. They traded into this high liquidity. Okay, now is this a high time frame level? No, it's not. Okay, so are we looking for a trend line break accumulation in here? What do we have? Right. Well, let's look at that on a kind of the smaller time frame. Okay, here's our trend line or a structure. Okay, do we get buyers here? A little bit, not much, not much. I want to see the bid too underneath here. And instead, we're seeing it on the offer. Okay, do we see a lot of sellers down here? Not yet. Okay. Now again, this is kind of risky, Nadia. Okay, there we go. Now that's hard to catch, right? You basically have to take the risk without really quite knowing, because it happened really quickly here. And that's pretty indicative of smaller time frames, right? You know, you have to really be on guard and look for it. And then boom, you're in, and then boom, you're out. Okay, but it kind of did it, right? Okay, so here's a, you know, like a micro reversal. I mean, I don't like using that word micro, but and look, we're right back down, and now this was just a pullback essentially. Okay, and now we're back down, and let's see if these sellers now can trade back down to here. Okay, some of these swings, the target would be 76.50 here. All right. Can I explain absorption and pulling? Sure. We're looking at some pretty good examples right in here. Okay, this would be absorption in here. Okay, now technically absorption means that it trades into a higher level of liquidity here, and it cannot trade below it. Technically, that's what it means. We kind of give it a little bit of a, you know, fudge it a little bit and just say, like, you know, here's high liquidity and high liquidity at another level, and it traded through it here by a tick, but basically it absorbed all that selling pressure in here, okay, in this time frame. Okay, so this would be absorbed, right? And then we see buyers come back up, and they trade into the sellers up in here, which absorb the buyer buying pressure. Okay, and what does pulling mean? Well, you see this all the time. See this in here? Okay, they're pulling, adding lower, etc. Or sometimes they just like see price coming toward them, and these buyers, for example. Let's just go into example here. Let's see these buyers. See these buyers here? They traded, and then they kind of lowered it here. Now let's see if are they interested in trading at 77. Yeah, they traded. All right, so they did not pull. Okay, pulling means that as we see price coming toward that high liquidity, they pull it from the order book. They got cold feet. They don't want to transact anymore at that level. Okay, it happens all day long. Right, that's why we want to look more at the areas that really transact. Okay, or, you know, we can look at spoofing type of activity. You know, like maybe see the high liquidity coming in here. Okay, here, and they're basically lowering the offer, and then you can see they're kind of pulling when it comes back up. Okay, but these guys stayed in the order book here and transacted at 78.25. Okay, big iceberg down. Well, not big, 200. All right, but look at our swing now. Okay, so our swing down here, and let's take a look at, now this is it's still not a fantastic level, but for this time frame that we're looking at intraday, it's not bad. Okay, and are we looking for a reaction? Yeah, I would look for a reaction down here, because there's a lot of buying and selling in this range in here. Okay, so and we're getting buyers coming back in. Okay, trading back up into the other side of the range. Okay, Nadia, here we go again. Right? Oops, not there. Hold on a minute. Let's close that. And let's look at this line here. Okay, and let's put some structure around that as well. So the diagonal line has now, of course, this is hindsight. It's kind of explaining stuff. You know, hard to be on top of it the entire time here. And then structurally, well, there's a structure here that we broke. And now these are really micro, smaller time frame structures, but you guys get the idea. And I would say another one's kind of here, and then we see buyers back up above it. Okay, so yep, I'm looking for it to trade to this swing, but then I would look for high liquidity here, but I'd be looking for this swing here. Okay, and we just traded up into and beyond it, up into high liquidity here at 83. Okay, look at the buying up here. Not bad, not bad. Okay, we're gonna find a reaction up here though. We're gonna find some sellers. Okay, we just traded into a bunch here, so we're seeing our pullback now. All right, so putting together again these three elements again and again and again, and seeing it in the context. Okay, so we're looking at our levels, our higher time frame levels, and then order flow around those levels. Okay, transactions and order flow. All right, and if we take a bigger step back, we're going to be looking at here, what's moving the market first? What's the impetus? And understanding that first, and then then looking at our key levels, and then coming up with strategies and scenarios, and then our setup. Anyway, guys, let's wrap it up. We'll call it a day. Thanks for coming, everybody, and we'll do it again tomorrow. Yeah, please put some comments in the YouTube recording there. How are we doing? Hit the like button there. That always helps us out. And come on over to our Discord. We have all sorts of events like this every day, as well as all sorts of materials over here. And there's no cost to it. Okay, to sign up for our Discord, you will have to have a register an email at bookmap.com, but that's it. All right. You can try out the free version there as well. Yeah, there is a recording for this. Ahmed, how do you use it to your benefit is understanding where these players are in the stops and icebergs. Now, especially a stop run is, I find, very helpful. And if I can combine the two together, it's great. So let's just take an example, Ahmed, a swing and a stop run below a swing, meaning that anyone that was buying up in here is getting stopped out down here. And then I'm looking for buyers to come back in above that level, okay, after everyone gets kind of stopped out at a level. That can help you tremendously, okay, by putting these pieces together. Look for accumulation from the icebergs. Okay, are they buying? Are they buying a lot? Okay, you can look at the context between the two in here. Now, I'm seeing a lot of sell icebergs now. Yeah, I'm seeing a lot of people get stopped out. Okay, to the upside. That's what's happening right now in the bigger picture. Okay, so then are you looking for that? How does that play into the scenarios that you're going to come up with? Okay, for me, that kind of clouds the issue a little bit. Am I looking for this breakout? It makes it look like I don't know. I mean, the larger players are taking their profits, or maybe they're selling up in these levels here. So am I really looking for trading up into this 90? I don't know. Probably not. Based off of the stops and icebergs in here. One thing though, Ahmed, is when you look at the stops and icebergs, you have to understand that they're not signals. They are a kind of a subset of the order flow. Okay, they are the order types within the order flow. Okay, to give you that granularity and understanding and insight within the order flow. The COB column is the current order book. The CVP column is the chart range volume profile, meaning the volume profile for the viewable range in my chart. If I zoom in, you can see it changed. If I zoom in more, it just shows the viewable chart. The SVP is session range volume profile. So from when I started my Bookmap, this is my volume column. All right, now look at, you can put the pieces together here for maybe a smaller time frame volume column to your higher time frame, right? So like, for example, look at our higher time. If I zoom all the way out, these should be equal. and you can see they are. I'm seeing a lot of activity above the open here, or above 10 o'clock. So then what am I looking for? Well, I'm looking for buyers to build out and they're doing it now. They're building it out in here, right? So then I'd be looking for, if that's the case, I'm looking for them to test the highs here. Okay, and do we have liquidity there? Yep, 88, 89, 90. All right, that's a way to put these together. So you can look at your smaller time frame here, volume column, volume profile column, and say like, okay, do I have like a kind of a weak top up in here? And then am I seeing a lot more buying coming in? Okay, great. Then I would look for them to trade up into this liquidity. All right, excellent. Thanks, guys. Thanks for coming. We'll do it again tomorrow, same time, and we'll see you then. All right, take care. Bye-bye.